Welcome to the Santu Pirls Market Commentary, Market Week ending June 7th, 2013. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.85 to 1.45, still in bullish territory. The total count of securities in bullish or bearish patterns decreased 6.5% to 2,039. The count of bearish stocks increased 9%, while the count of stocks in bullish patterns increased 1%. The Santu Pirls PNF Market Breadth Summary Chart shows us a market now 27 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on the Membership tab, and clicking Sign Up. For those who are interested, a 2-week free trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 146 points for the 18th decline in 37 weeks. At a positive 495.26 points, it has now dropped below the March 2013 top and the January 2011 top, and continues below the February 2012 top and above the September 2012 top, the September 2012 top, the November 2011 top, and the November 2010 top, above the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 2 accumulation days and 1 distribution day. Of the other indexes, the S&P 500 deposit receipts ended in neither accumulation nor distribution mode, while the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 also ended in neither accumulation nor distribution mode. Momentum. On Tuesday, 5/28, the CCI 20 daily moved upward from 39.04, so we entered a valid zero-line reject long trade at Wednesday 5/29 open. The CCI 20 fell, rose, then fell, but not below our zero-line reject pivot point until Monday 6/3 close, so we exited the trade at Tuesday 6/4 open for a loss of 4.65 points on the Nasdaq Composite, or 0.07 per share of QQQ. The CCI 20 daily now has 5 days below zero, but is just below zero and is moving upward, so the Woody's trend may not change. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 17 weeks ago, while the daily CCI 20 began a Woody's uptrend 12 weeks ago. The CCI 20 weekly now has 23 weeks above zero and began a Woody's uptrend 17 weeks ago. At 114.20, it continues outside the plus or minus 50 range for a valid zero-line reject signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 industries are negative. Bullish, networkers and computer hardware remain in the top 5. Brokers has entered the top 5. Bearish, gold and silver remains in the top 5. REITs continues to lead the bottom 5. Disk drives has left the top 5. Oil services has left the bottom 5. Focus this week, UST Bond, Return to Sender, by Jim Willey, CB. From the article, quote, in the last several years, perhaps 5 or 6 years, the stage has been set for a great change. A device has been put in place by numerous nations for trade settlement in barter framework, which has bypassed the US dollar, end quote. Read the article for more info about more exactly what form the change is likely to take. We would also like to call your attention to an article at amateurinvestor.net on the Hindenburg omen, a very reliable bearish indicator, which has taken shape this past week. Thank you for joining us for this week's market commentary. Hold on for the wild ride that may be ahead, and happy trading.